By running these Irish subsidiaries from group headquarters in California, they avoided Irish tax residency. At the same time, the directors knew that their Irish companies would not qualify for tax residency in the United States because American tax law worked differently. Under U.S. rules, a company has American tax residency only if it is incorporated there. Apple sought the holy grail of tax avoidance, offshore corporations that it argues are not, for tax purposes, resident anywhere in any nation. Then Senator Carl Levin, Democrat Michigan, the Senate subcommittee chairman, said at the 2013 hearing. Ireland's finance minister at the time, Michael Noonan, at first defended his country's policies, saying, "I do not want to be the whipping boy for some misunderstanding in a hearing in the U.S. Congress." But by October 2013, in response to growing international pressure, he announced plans to require Irish companies to declare tax residency somewhere in the world. At that time, Apple had accumulated $111 billion in cash almost entirely held by its Irish shadow companies, beyond the reach of U.S. tax authorities. Each year, the pile grew higher and higher as billions of dollars in profits poured into these low-tax subsidiaries. Company officials wanted to keep it that way. So Apple sought alternatives to replace the tax shelter arrangements that Ireland would soon shut down. At the same time, however, the iPhone maker wanted its interest in the offshore world kept quiet. As Cameron Adderley, global head of Applebee's corporate division, explained in an email to other senior partners, "For those of you who are not aware, Apple officials are extremely sensitive concerning publicity. They also expect the work that is being done for them only to be discussed amongst personnel who need to know." For Applebee, Adderley explained, "This was a tremendous opportunity for us to shine on a global basis with Baker McKenzie. Baker McKenzie's role in setting up offshore structures for multinationals, and then defending them when challenged by tax regulators, is legendary. The law firm has also been involved in lobbying against proposals to crack down on tax avoidance by technology giants. It has 5,000 attorneys in 77 offices around the world." Former partners include Christine Lagarde, the former French finance minister and now managing director of the International Monetary Fund. Behind closed doors, Apple decided that two of its Irish companies should, with the help of Applebee, claim tax residency in Jersey, one of the largest island shelters with strong links to the UK banking system, where Apple's Irish subsidiaries already held accounts. Jersey is a crown dependency of the United Kingdom, but it makes its own laws, sets its own tax rates and is not subject to most European Union legislation, making it a popular tax haven. As Apple's plans to use an offshore tax haven progressed, another potential problem emerged. In mid-2014, again under pressure from other governments, Irish ministers had begun exploring a ban on a tax shelter known as the Double Irish, an avoidance strategy used by scores of companies, including Google, Facebook, LinkedIn, other tech companies and drug makers such as Abbott Laboratories. The Double Irish allows companies to collect profits through one Irish unit that actually employs people in Ireland and is tax resident there, then route those profits to a second Irish subsidiary that claims tax residency in a low-tax island such as Bermuda, Grand Cayman or the Isle of Man. A crackdown on such arrangements could have interfered with Apple's plans in Jersey before they had gotten off the ground. Although it was aimed at double Irish structures, the potential rule change would ban all Irish companies from claiming tax residency in a tax haven. While the iPhone maker was not in a position to protest loudly, others spoke up. California-based Teralia Wielinga, who was then international president of the Tax Executives Institute, wrote to Irish Finance Minister Noonan in July 2014, warning that moves that would effectively ban double Irish structures may not be prudent. And if Irish ministers did press ahead, she added, they would be well advised to incorporate a substantial transition period. What her letter did not tell, but leaked Applebee papers now show, was that Wielinga was quietly orchestrating a long-standing double Irish structure at Botox maker Allergan, where at the time she worked as head of tax. For over a decade, the structure has shifted profits away from Ireland, where Allergan has a Botox factory, to Bermuda. ICEJ attempted to contact Wielinga but did not receive a response. Allergan did not answer specific questions about its tax affairs but said, Allergan abides by all applicable tax laws and accounting rules and pays all taxes owed in all jurisdictions where it does business. The lobbying seemed to work. Ireland included a generous grandfathering clause for Allergan and other multinationals using Irish tax structures. For existing companies, there will be provision for a transition period until the end of 2020, Noonan declared on October 14, 2014. More precisely, the fine print of policy documents revealed, the grandfathering provisions would apply not just to companies in existence when the finance minister spoke but also any new ones created up until the end of 2014. That gave Apple just enough time. By the start of 2015, it had restructured its affairs in Ireland, including securing tax residency in Jersey for Apple Sales International and Apple Operations International, two of the three Irish shadow companies highlighted in the U.S. Senate investigation a year earlier. For the previous 5 years, Apple Sales International had been Apple's biggest profit generator, churning out more than $120 billion.
Apple was not the only multinational that moved quickly to grab a final chance before 2015 dawned. At the end of 2014, a window of opportunity closes. Advisors from big U.S. law firm DLA Piper explained to Citi XSYS. DLA Piper set out a frenetic schedule of incorporations and intellectual property transfers to be rushed through before the new year to set up a double Irish,